We are half an hour away from the opening bell. Hong Kong, Shanghai, and Shenzhen. You're watching the China Show. I'm David Ingles. Let's get to your top stories today. Stocks in China in focus amid this return in volumes and turnover, with the CSI 300 set to retest the 3,700 level. Shares across the region are trading flat ahead of Nvidia earnings. Right, hot debates on Chinese social media platforms about whether new easing measures are enough to lift property prices. State media flagging growing calls for policy to boost consumer demand. Plus, succession in focus for major Middle East rivals after the Iranian president's death and the ill health for the Saudi king. Finally, we're here. Welcome to the show once again. The Tuesday session, just under 29 minutes away. We're hitting the pause button really in most parts of this equity market. You know, we are at record highs in the global benchmark. We've been up for 7 straight days in the Asia Pacific. We're looking for further clues, which actually could come in the form of, let's see. And you know what? Nvidia is still more than a full day away, Thursday morning Asia time. So we'll see whether that's a catalyst. We'll see what, of course, the next few hours holds as well. Flip the boards, please, if we could, and look at the Golden Dragon Index overnight. Also declines there. So really not a clear lead coming out of Wall Street. We were down 1.7%. Earnings in focus in these greater China markets. So you have the likes of Li Auto out with earnings. Trip.com reported a couple of hours back, a beat there. And on deck today is XPeng, EV maker. Shares are down effectively by half this year so far, year to date. We're looking at things like revenues, for example. Still not in the money as far as profit and loss is concerned there on XPeng. 0.2 of 1% to the downside right now, Asia Pacific. Flip the boards, please. So A50 futures coming online in Singapore. So we're looking at fairly weakness across these markets going into the open today. So, you know, a couple of things, right? So when you look at what's been happening in Hong Kong, we're 10, 11 weeks into this rally. On price, we're 35% in. Some of these overbought signals have been flashing for some time. Bollinger Bands, 14-day relative strength indexes. I think we're now at about 80, 81 in some of these. So effectively, not just 70, right? Effectively, we're back to the extreme levels on some of these momentum gauges. You have to go all the way back to 2023. The peak of the reopening rally, and going all the way back to 2021. More on that in a moment there. But certainly, one of the items on the agenda today will be whether or not we are able to continue this risk rally across these markets, which, by the way, in terms of correlations, we've certainly divorced from what we've seen so far outside of China, right? So world-beating rally still, 35%. XPeng earnings, we talked about that. There's a briefing this hour out of John Lee. Mining and crypto stocks, mining-wide is a rally in base metals. We know where copper is. We know where gold is. Iron ore, for example, is at about 120. Some of these rebar futures in China are at 2-3 month highs. Crypto stocks, in case you missed that, very big move overnight in Ether. I think last I checked, Bitcoin was close. If not, I'm not surprised if we're at 70,000 as I speak. So that group of specific stocks will be very much in focus today. Apart from that, of course, all the Fed speak coming out and where we are as far as this conversation goes. Another raft of Fed officials reiterating the central bank's wait-and-see approach in rates these last few hours or so. Have a look.
I was on the record before saying I was at the median, which was 3. The developments I've seen in the economy right now, I would not think that that's still appropriate because the inflation risks have moved up.
I do think that our new steady state is likely to be higher than what people have known over the last decade. Maybe back to where we were in the 1990s and 2000s, but we'll just have to see.
Okay, joining us now amidst this pushback still from Fed officials and this melt up still in risk assets, Stephanie Leung is here with us, and CIO at wealth manager StashAway. Nice to see you and good morning. I think you were here about 6 or 7 weeks back as we were just about, I wouldn't say beginning, but we were at the cusp of escape trajectory in this Chinese market. More on the China moment, conversation in a moment, but everything seems to be going well. too well? Should I be worried?
Well, I mean, never a dull moment, right, in markets. I think about a month ago, in kind of mid-April, we made a pretty significant call to kind of look at the cyclical side of the economy. And when we look at that, it's basically signaling that the economy is expanding again. And we made adjustments to our portfolio, basically moving cash to work, putting cash from just kind of a kind of short-dated duration bonds to equities and also cyclical parts of the equity market. And the rationale back then was basically we're seeing the global manufacturing cycle having an upturn. In the meantime, inflation is still coming down, but we are basically not seeing inflation coming down as quickly as the market would expect. And therefore, we're still in an inflationary environment, but given that growth is coming back, that's actually pretty good for cyclical stocks. And that's why we've actually been putting cash to work to buy into industrials, to buy into emerging markets, etc. And these have worked out quite well in the past kind of 4 to 5 weeks. And we expect this cycle to be continuing.
Okay. Would you be leaning further into risk assets at this point in time then?
So I mean, you mentioned a lot about the overbought conditions. Now, of course, we've had a big rally, and in the short term, who knows, right? Nvidia earnings may put a cap onto market sentiment, or it may kind of rocket it higher. And I think if you look at kind of a medium-term perspective, yes, we do see more upside in terms of the overall market. Reason being that if you look at valuation for a lot of stocks, and for example, especially for the cyclical stocks, I mean, they're actually not that expensive. China, for example, given the rally, is not at 8 times earnings, but it's still, I mean, like kind of 10, 11 times, which is, I mean, about the historical average, maybe 5 to 10% more upside from there. But I think in terms of earnings, I mean, we're seeing earnings recovery in these cyclical sectors, and there are more themes now to choose from. So if you think about kind of the bull market that we've had in the US, it was all about the Max 7. It was all about AI, because there was no other things to choose from. Like everything else was basically going through an earnings downturn. Now we're seeing actually that changing. So while the liquidity environment is still quite supportive, that actually means that the rally can actually broaden out. Okay, so broaden out, you mean broaden out beyond AI, or are there other options within the broader AI theme to play? Actually, I think both, right? Okay. We've seen a big rally in terms of AI infrastructure, power companies. I mean, even utilities are benefiting from this AI theme. And when you look at the fundamentals, I mean, they are actually, I mean, somewhat justified. For example, one search in generative AI, if you like kind of input a query, requires 10 times as much power as a simple Google search, right? Yeah. So there is fundamentals to it. Now, the other thing that adds to it is that the cyclical recovery, and in particular, China's sort of bottoming out, means that these industrial companies actually have another tailwind from a macro perspective as well. So I think actually it's kind of everything kind of working in favor of these sort of more cyclical sectors. What about China? So, I mean, earnings, you mentioned, I think the last time, backward-looking indicator. You know, funds have been rewarded to be underweight China. Yes. That might have changed this quarter. In fact, that's the opposite this quarter. At this point, though, you know, if I've missed out on this initial leg higher, do I still chase this rally, or do I stay put? Because that's a different dynamic. Yeah, I mean, we get a lot of questions about this on China. And I think, so we've had like a 30% rally, and that is from a very, very oversold condition. Every fund is underweight, so there's been a lot of kind of chasing back. Now, valuations are back to kind of more normalized range. So you can still see some, like, somewhat kind of normalization to historical averages or even beyond, but it's not as juicy as before. From a earnings perspective, if you think about kind of Chinese earnings, revenues have actually been historically growing at 5 to 6%, which is quite in line with GDP. So going forward, I think we can expect similar numbers. In terms of margins, actually Chinese margins have been compressing. And a lot of that has been due to the significant compression in margins for technology companies like Alibaba or Tencent. We're starting to see that stabilize, but for us to kind of project a margin recovery, I think that's still too early. So if you combine the two in terms of revenue growth and margin not changing that much, then, I mean, going forward, you can expect kind of 5 to 6% or mid-single digits earnings growth for Chinese equities, which, if you compare with U.S. stocks, it's still not particularly attractive, but at least it's not kind of, I think at least you're not seeing earnings kind of declining.
Right. And the Chinese market, to your point, is trading at half the value it is in the U.S.
Yes.
Like 10 to 20, right? 10 in China, 20 in the U.S. Yes. So do I take it then, in short, what you're saying is maintain your exposure in China, but we haven't seen enough to broaden out beyond the big growth names?
I think actually, so in terms of Chinese exposure, apart from the China market, I mean, there are other alternatives that you can play.
Okay.
One example is actually commodities, in particularly copper.
Okay.
So copper prices just kind of broke above 10,000. And when you think about copper, I think it's actually in a very, very interesting juncture because one thing that held back copper in the last 2-3 years was actually the Chinese property slump. And I mean, copper is called Dr. Copper for a reason because it actually tells you kind of what's going on in the real economy. If, I mean, Chinese property sector does bottom, I mean, that is positive for copper. On the other side, also, I think if you think about the whole AI demand, power demand, infrastructure demand, that is also positive for copper. Added to that, I mean, that's the demand side. From a supply side, I mean, copper infrastructure has also been underinvested in the past few years. So therefore, if you do get a recovery in China, I mean, I think that would be a good play to think about as well. Okay,
back to your earlier point, copper was an indicator that this manufacturing story might have turned. Final question for you. We haven't talked about fixed income. Short durations trump going up the duration scale. You know, what role does fixed income play in portfolios these days?
Yeah, so we're still maintaining our kind of underweight in duration. Reason being, like the curve is still inverted. I think in the near term, you still get better kind of prospects from shorter term rates, in particularly since we're seeing growth picking up. In this environment, you typically don't want to go longer duration. The other overhang is, of course, the longer-term inflation outlook. We've spoken about this before, and if inflation actually settles at 2.5% to 3% instead of the 2% target for the Fed, that has implications, negative implications for going long duration as well. Of course, the market was also very worried about fiscal conditions of the U.S. a few months ago. Now that debate kind of subsided, but to us, that is a structural problem that we'll have to think about in the next kind of decade.
Okay, and your portfolios have done well, right? Very quickly.
Yes.
Okay, there we go. Stephanie, fantastic. Stephanie Leung there, StashAway CIO. Just ahead here on shows, we just brushed on this topic. Nvidia shares up overnight ahead of that highly anticipated earnings report is an understatement. We hear exclusively from Jen-Hsun Huang, CEO, a bit later on in the show. Ahead of that, though, power transitions in the Middle East in focus as the death of Iran's president, adding a new layer of uncertainty to a region already in turmoil. Details just ahead here, counting down to the open of trade. Futures are pointing lower. In fact, we're now at session lows on the A50 contract in Singapore. It's rainy, fairly wet Tuesday morning here in Hong Kong. 17 minutes away, the opening bell. This is the China Show. Right, welcome back. 15 minutes into the show here, right on time here for this daily adjustment, and it's quite a noticeable one. On dollar China right now, following the fix of the day. Okay, this is actually moving quite a bit now. We're looking at 710.69. The estimate was effectively at 723.49, so still quite some distance there. So there seems to be some dollar strength coming through here in this market. We'll try and get to the bottom of this and tell you why in a moment. Let's pivot though, and let's have a look at the Middle East. Certainly, this week has been fairly heavy as far as news flow is concerned. Power transition certainly is really what underscores conversations there right now. You had the death, of course, of Iranian President Ibrahim Raisi. In Saudi Arabia, you have King Salman bin Abdulaziz and the health there, and his health being closely watched, of course, as he receives treatment for a lung inflammation. Let's bring in Bill Ferries, our senior editor, who joins us from Singapore right now to talk us through this. And Bill, let's start with Iran and certainly the latest on Iran and also on Saudi Arabia. Just get us up to speed here.
Yeah, well, as you were hinting at there, it's really been one of the most tumultuous periods any of us can remember in the Middle East. You've got succession potentially underway in the two of the region's real heavyweights with Iran and Saudi Arabia. Saudi Arabia, of course, it's been a little bit more telegraphed, and the Crown Prince has been running things on a day-to-day basis for quite a while. But in Iran, there's really two big questions. The first is who will emerge to be the next president. They are expected to have elections within 50 days if everything follows the Constitution. The interim vice president is now in power. He may end up being the candidate. But actually, the biggest question, of course, is who would potentially be in line to succeed this country's supreme leader, Ali Khamenei, who is in his mid-80s at this point. And the late President Raisi had been seen as a very likely successor. So that opens up a lot of debate. What's not really in question at this point is kind of the general direction of Iran, the conservative control over the government. That is expected to stay along with the foreign policy priorities. This is not expected to be an election where you see some kind of a more moderate candidate emerge. The clerical establishment will keep control of the candidates and the potential nominees, but it is still quite a bit of change in a region that's already obviously facing a lot of turmoil with the Mideast conflict.
Now, Bill, just to shift our focus, I also want to ask you about these warrants on the Israeli Prime Minister Netanyahu. Now, we also heard on that story from President Biden and also the Israeli Prime Minister on those ICC warrants issued against the Israeli leader and Hamas officials. Let's have a listen to that, and then we'll talk about it on the back of it.
We reject the ICC's application for arrest warrants against Israeli leaders. Whatever these warrants may imply, there is no equivalence between Israel and Hamas.
The outrageous decision by the ICC prosecutor, Karim Khan, to seek arrest warrants against the democratically elected leaders of Israel is a moral outrage of historic proportions.
Bill, what exactly do we know about these warrants?
Well, the ICC has put out warrants for top leadership in both Israel, including Prime Minister Netanyahu, and the top leadership of Hamas as well for their October 7th attack in Israel. There's been some, as you heard there's been a lot of outrage at the seeming equivalence between going after a democracy and a group labeled a terrorist organization. The ICC has had a lot of difficulty in the past enforcing these kind of warrants. There's a large number of, there have been some African heads of states and military leaders who have basically continued to go about their lives and their business and in their positions without getting arrested, even when they travel to some countries that are members of the ICC. So it's hard to see what happens in the immediate future, but these ICC warrants they are realities that tend to hang over leaders' heads for years and years to come. Whether they can be enforced is going to be a very open question.
Bill, thank you. Bill Ferris, our senior editor. That takes us really into just a brief look at how commodity prices are doing at this point in time. Certainly, oil is very much in focus, but really away from that, the story this week has been this melt up and still melt up. Press intense in copper, 89,000 now on the Shanghai contract. Gold futures seeing a little bit of downside. All that being said, though, these are pretty much at record highs as far as these two are concerned. Right, futures going into the open 9 minutes away. We are looking at some weakness across these markets. We're coming off 7 days of gains across the region, 0.5% to the downside right now. Dollar China now trading at effectively 7.25 there against the U.S. dollar. Right, plenty more ahead. This is Bloomberg. Welcome back. You're watching the China Show. Dell's CEO says the company is unveiling a new line of personal computers optimized for AI tasks. Now, we spoke exclusively with Michael Dell alongside the Nvidia chief Jen-Hsun at the Dell World Conference taking place in Vegas.
All our new PCs will be AI PCs, right? And the reason is that anything that you're doing that has an edit prompt is going to be sped up because every software developer in the world is figuring out how to use all this new power in the GPUs and the NPUs in these new AI PCs.
Neural processing units for the
exactly.
initiated.
So that experience will be better. So when your PC is now 4 years old, it's time for you to get a new one, right? You're going to want the one that speeds up those new capabilities. And inside your company, they're going to want to make sure you have that they don't want to buy a machine that's going to last for several years that doesn't have that capability.
Jen-Hsun, where is Nvidia's place in the AI PC? I know you as gaming. Again, I grew up with the gaming side of Nvidia. Do you have a place in the AI PC market?
Come back next year.
Exactly. There are a bunch of Nvidia GPUs and Dell PCs, and Dell workstations. All of our GPUs have the same tensor cores that are running in H100s in the cloud. And so every one of our GPUs use AI to do its work. AI, of course, is going to transform gaming. All the NPCs, the non-player characters, they're going to be chatbots.
Think about development time, how it will be cut, for example.
Creating worlds is going to be easier. Instead of instruction-driven computing, it's now intention-driven computing. So it's easier to write programs. Python programs will be even easier to write. Video conferencing will be a lot better because of it. Yeah.
But what you did with Blackwell and other products is you innovated by saying, okay, let's combine GPU with CPU. Is that the next iteration for you in AI PC? You go, okay, here's the Nvidia CPU that goes with it.
We want to support every CPU the world makes. And there are places that want x86, we support x86. Yes. There are places that prefer ARM, we support ARM. We just went to ISC, and the top most energy efficient supercomputers in the world are now powered by Grace Hoppers. And so wherever it makes sense, we'll support the right CPUs.
There we go. NVIDIA earnings, of course, very much in focus, probably the most important market event this week. Speaking of earnings, that's Thursday morning, by the way, Asia time, NVIDIA. Earnings coming through in Greater China. Li Auto getting absolutely thrown out the window today on the back of the disappointment around deliveries. XPeng is out later today with their earnings. Trip.com reported decent set of numbers earlier on, and Tektronic is a reshuffle, a shift there. Amidst the company announcement, its CEO is resigning. Going into the open today, we are poised for a lower open. Hang Seng Index, 0.8%, 12.8 right now in A50 futures. The opening bell, 3 minutes away. You're watching The China Show. Welcome back to shows. The opening bell just under a minute away here in Hong Kong and China. I think CSI 300 retesting 3,700 in recent days here. 20,000 was a distant dream 6 weeks ago. We're closer to that dream, maybe still a dream. 30 seconds away. Speaking of, we're looking at a couple of things that are set to take place in the next half hour or so. So one is RBA minutes are set to come out. This is for the most recent meeting. I think it was May 7th or May 6th or 7th, early this month. And John Lee, Hong Kong Chief Executive, is set to speak as well. It's a weekly briefing, of course, there. So we'll keep an eye on any sort of news lines coming through out of the Chief Executive here. In the meantime, though, the opening bell, here we go. We're looking at some declines here in the opening minutes. And the RBA minutes are also just dropping across my screens. My producers will try and sort the order at which we hit these pieces of news here. Goldman Sachs, more on that call in a moment here. 3,700 we were briefly above that level on the CSI 300 yesterday. We're looking at mostly declines, as you can see, bottom of your screens on the heavyweights on the CSI 300. So really you have literally bookending your two big booze makers, Mao Tai and Wu Liangye. Ping An Insurance is down about 1%. Flip the boards, please. Have a look at where we are as far as Hong Kong is concerned. Effectively, tech, where the winners have been is tech. That's where we're seeing most downside still, 1.7%. There's a big earnings theme across the EV space to tell you about today, and really big declines if pre-markets were any indication of how this day is going to go. Apart from that, crypto, Ether was a big move up overnight. Bitcoin, 70,000. In fact, let's have a look at some of these crypto stocks trading here in the Greater China region. You have 3 on your boards in Hong Kong, 1 in mainland China. Mixed bag there, although you are seeing, of course, that moving slightly against the grain. 71,000 Bitcoin, bottom of your screens. There we go. Okay, here's the big one. XPeng is out with earnings later today. Looks like the options market going into this one is wrong-footed. Options, actually, we had a look at the data, did imply a post-earnings lull. Well, to be fair, it is post-earnings lull, not pre-earnings lull. Li Auto is down 17%. Big drop overnight, out with earnings as well. Disappointing as far as sales concerned. Trip.com, more on that in a moment. And Tektronic is down 2.6%. The company announced its CEO is resigning for personal reasons. Right, as promised, Goldman out yesterday revising their targets for MSCI China and the CSI 300, old on the right, new on the left, 70, and we're at 64, so just do the math really. These are 12-month targets, so about 5, give or take, from current levels, 5 points, and the CSI about 4,100. Also HSBC also dropping a note, almost simultaneously really, saying it's too early to take profits on this China stock rally. All that being said, I mean, you look at technicals, though, as well, and it could also be a different question. I should emphasize this. Some of the momentum indicators are flashing hot, right? So I think one of them that we've been tracking in recent days is the 14-day relative strength index. So you look at the Hang Seng Index, I think we have one coming on your screens on MSCI China. It's comparable to the extremes we've seen in recent years. We're trading at about 35% into the rally, 80 level. 70 is typically where people go and say, okay, a little bit overbought. Well, has the rally gone too much, too fast? Let's put that question and others to Marvin Chen, our Bloomberg Intelligence equity strategy analyst, to talk us through this. Has it gone too fast, Marvin?
Yeah, I mean, if we look at the momentum indicators that you just mentioned, it's definitely signaling overbought. But we think there's an element of fear of missing out that's kind of driving this market rally. We took a look at the EM fund manager positioning. The active weight for China was still declining in the first quarter. So, we're seeing this rebalancing, scrambling, and this is what has really been powering the sharp move up since April. From a valuation perspective, China, Hong Kong is still relatively undemanding compared to global markets, but we are kind of nearing these near-term averages. So we think earnings are going to have to be doing more of the legwork going forward.
Right. And weightings and exposure to China from EM funds, can we at least assume that's hit a bottom? And that simply goes up for here on the fear of missing out trade?
Yeah, exactly. So we think the first quarter will likely be a bottom for the exposure, and we base this on 2 things that we looked at. We looked at the top 100 EM active funds, and we noticed that even though the weight towards China was declining in the first quarter, the pace was actually slower than the decline of China within the MSCI EM index. Also, we're seeing more of the funds that we looked at, around 50 to 60 of these funds moving towards a neutral to slightly overweight position. So we do think that this is something that we haven't seen since the reopening pivot in late 2022.
Right, in early 2023, because it's been since at that point it's really been all India, and some of the funds, as based on your research here, that have outperformed were rewarded because of the overweight in India. Is that changing, you think?
Yeah, so we are seeing a shift out, particularly within the tech space. We've seen a lot of movement there. North Asia, Samsung, SK Hynix, right. TSMC. These were the really hot stocks coming into the year. And we've seen some rotation out of these stocks and towards China winners such as Tencent, which has really been leading the kind of rotation. Yeah.
Well, speaking of tech, earnings are just about to wrap up. I think we still have one more PDD, if I'm not mistaken, coming out. But what are your broad takeaways so far from this earnings season?
Yeah, broadly speaking, the tech sector has been delivering positive surprise on both the top and bottom line, and this has been enough to kind of sustain the momentum for the sector, and this has translated into gains at the index level as well. What's interesting is, if we look at the largest 8 China tech companies, which have been reporting last week.
Your Tech 8.
Yeah, the Tech 8.
The Tech 8. The popular Tech 8.
And they have contributed like around 50% of the gains since the January lows, and this 50% contribution is in line with the impact that Magnificent Seven has had on the S&P 500. But what's more interesting is that China tech valuations are still trading at a 30 to 40% discount to their U.S. peers. So this suggests there is room for some valuation convergence within the tech sector, and I think that's what we've been seeing happening. This rotation going on over the past month.
Right. Is there a case at this point, or might it be too early for a case to broaden out beyond the Tech 8?
Yeah. Well, for now, the index move has been driven by the Tech 8, but we do think that some of the steps, such as the property measures that have come up over the past week or so, these things are kind of broadening the potential momentum within the market.
Property. I just ask you about as a final question. I mean, it's a tiny percentage of weighting in this market. But it's certainly, punched above its weight. It's, some of these names are up 100%.
Yeah.
How are you looking at property measures? As a function, I guess, of just that sector, or is this perhaps also a leading indicator of the broader market too at this point in time?
Yeah, we think it is an important indicator, particularly for consumer and market sentiment. There are some concerns that the recent measures are not enough to fully address the property supply issue. But we do think that there is value in the signaling effect of these concrete actions that policymakers are taking. I think we're seeing a shift in the policy implementation, whereas in the past 2 years we had we may get vague guidelines with lack of details, but now we're seeing concrete actions, and I think these things can help stabilize market sentiment. And we also may hear more on the property front with the upcoming plenum in July. So I think there's more to hear on that front.
Stay tuned for more regular programming if this market continues. Marvin, fantastic stuff in his research and his team there. BI Go for Bloomberg clients on your terminals. Okay, some big moves in the currency market to tell you about while we were talking about equity markets in China. Let me get started with why not the Philippines. Okay, so we were trading above 58. That's a sort of line in the sand, that key dollar peso level right now. We were above that at this point in time. Now, broadly speaking, I'm just trying to search for any domestic catalysts there. Just keep in mind, though, broadly speaking, we're looking at a broad, strong dollar story today. Hence, dollar China's to 725, dollar yen's moving up as well. So that simply could be a function of that as well. Keep that in mind, and we'll keep an eye on this, of course, amidst this melt-up in dollar. And amidst all the Fed speakers coming out, of course, still these next few hours or so. Okay, on the back of this, also the Aussie dollar holding on to strength. These are RBA minutes coming out, and among the lines here, okay, I'm just going to pick, and bear with me, this is live TV, I'm trying to pick the most editorially relevant to you guys here. There is limited tolerance for CPI to return to target later than 2026. In other words, they will do what is necessary to bring that inflation target within target. There we go. This is from the meeting in early May, May 6 or May 7. Okay, that's a currency market story for now. Equity markets on offer. Dollar is bid, as with crypto, as with commodities. We'll talk more about the earnings story just ahead. This is Bloomberg. Right, welcome back to shows here. There's a fairly decent earnings team coming through across these markets. A Trip.com out earlier on, 2.7% there. Perhaps a sign of rebounding travel appetite in China. Adjusted earnings per ADR or ADS here beating estimates. Later Tuesday and late on Monday, so two stories. Li Auto disappointing, and as you can see, 16%, biggest drop in about 2 years there, or close to 2 years. And XPeng reports later today. And the earnings call, I believe, is 8 p.m. local time. So, yeah, if you have an entry ticket to that, of course, stay tuned for that. Anyway, let's talk about these earnings stories and some big moves across these markets right now. Let's bring in our team, Linda Liu, our Asia Transport reporter, and also a Bloomberg Intelligence senior analyst, Angela Han Lee, to talk us through the Trip.com story. Linda, I'll start with you. Why don't we start with Li Auto? The market didn't like what it saw.
No, bad morning for Li Auto after they missed earnings estimates. Most of that is probably due to their latest, the first pure electric vehicle called the Mega
It wasn't too mega, was it?
No. The sales disappointed. Li Auto had really high expectations for this vehicle, but it didn't deliver. So now going forward, I think Li Auto will probably shift focus, maybe slow down on their pure electric offerings and just continue to really push their stable, reliable vehicles, which is their plug-in hybrids, the extended range vehicles.
Okay, well, one last question on Li Auto before we move to XPeng. Didn't they already revise lower their sales targets on Mega?
Yes, they did. And Mega has just been a flop, I would say. And I guess even with the revised sales, they still didn't manage to kind of achieve expectations.
Right, from about 100K to about 70K was the revised one as well. Okay, XPeng, a company that is, the stock's down 50% this year, give or take. It's not making money still. Well, the bar's quite low going into this earnings report.
Yeah, so XPeng, I think the picture right now seems a bit more positive. Analysts are expecting their profits to grow compared to last year with estimated 50% revenue growth for the last quarter. XPeng has seen some healthy growth in their deliveries for the first quarter this year, about 20%. So that's hopefully going to bring in some higher returns for them. They also got some new brands, new products coming up. So I think they're hoping customers will like what they've got to offer.
Yeah, they had a launch at the mall here recently, didn't they? Late last week. Angela, I'll bring you in, and just to pivot to Trip.com. Out earlier on, this one was a decent set of numbers.
Yes, it looks like car was also okay. And T-Com was not that bad either. So the number has been very strong. It's mainly because, again, it's about the leisure travel demand. The corporate travel is not that strong. It was only up like a 15% in the first quarter. But if you talk about like a package tours, was up like a more than doubled in the first quarter of this year. And also it looks like more people are heading out to other destinations. So people are staying longer outside, and also actually they spend more because they have the flight to Singapore or Thailand or even to Europe. It looks like people are pretty excited about that. So I feel like actually rich people are still rich. They still keep traveling out. But if you talk about like pure China domestic travel, it looks like perhaps spending is worsening. So shall we say that the like a divergence between the wealth gap is increasing? That's like a kind of my takeaways.
Okay, now is this a Trip.com story or is this a broad recovery in travel story in China? In other words, how does Trip.com compare to other travel-related plays in China?
I would say T-Com has been doing better than other travel names because the company gained the market share during pandemic, as we said earlier. But in general, I think China outbound tourism is something that is really happening, and then people are going to other destinations faster than we expected. We thought something like people will start going to Europe maybe from the second half of this year, even like more like a 4Q of this year. But the company is already saying that like many people are traveling to Europe from the second quarter of this year, like France. And think about like Olympics later. So I feel like the outbound tourism is recovering faster than expected. But one other interesting thing is that the company say they want to design some products to cater this silver generation's travel demand. So think about like even a year earlier, everyone was talking about making money from millennials. Now suddenly we all want to make money from elderly people.
Like children and our parents. Thank you so much, Angela Han Lee, of course, and Linda Lu. Okay, that was a strange analogy. Apologies for that. Okay, 60 minutes into the session, we're looking at weakness across these equity markets. Plenty more ahead. You're watching The China Show. Taiwanese PC maker Asus says it's confident its AI-focused laptop can compete in a global stampede here to deliver products focused on this new technology. Samson Hu, the co-CEO, spoke exclusively with us in Taipei about his company's strategy and also ambitions.
Within 3 years, we want to achieve number one in the consumer market, but if you come in the commercial part, we would like to be ranking on number 3
You have this new Snapdragon Elite X, or X Elite processor, right?
Yeah, that's correct.
Why the switch to Qualcomm? Are they able to offer the speeds that are necessary to incorporate, like Microsoft Copilot and the AI capabilities, and at the speed and battery life that is necessary, as opposed to what you were previously getting with Intel?
Because of the new era of AI, the application is totally new. So those kind of early about the legacy application compatibility about ARM is not so important.
Do you think this is going to rekindle the debate and give new life to the old debate of PC versus Mac?
This time, I do believe this is a good opportunity for those PC brands, including Asus, to compete with Apple. Yeah, because of the introduction of the Qualcomm ARM-based CPU and NPU.
There's been a lot of hype over AI, as you know. But at what point is there the risk of overhype?
So this is an opportunity and a challenge for the industry. So right now, I do believe through the joint efforts of the PC industry stakeholders, our joint efforts, we are developing necessary technology and overcome those challenges might be brought by the AI technology. We will overcome and bring this kind of new opportunity.
Copilot, in particular, from Microsoft, Copilot AI, will be on the consumer laptops. I believe that they require access to user information for Copilot. How are you navigating that tricky requirement?
According to the experience or the collaboration between Asus and Microsoft, I am confident that kind of privacy issue will be carefully tackled.
Right.
Yes.
But how many of these features, these types of features, would be available on PCs that potentially go into places where data privacy is much more enforced, like China?
The Copilot, there are a lot of different Copilot AI assistant applications going to be provided by Microsoft. So this time, Microsoft Copilot functions will be only partially available in China market.
What kind of demand are you expecting for this new AI laptop?
Our estimation is about single digit penetration of AI PC.
But single digits is anywhere from 1 to 9%.
Maybe high single digit.
High single digits.
Yeah, if I say it more specifically.
Much is made about cross-strait ties and also the economy. How do you see the significance of Lai's inauguration and of the need for a status quo across the Taiwan Strait? Not to get too political, but as far as creating and maintaining a steady and stable business environment.
President Lai, he really understands that ICT technology in Taiwan plays a most important role, contributing to the nation's GDP. And actually, President Lai used to have very frequent contact or even meeting with the industry leaders. And for myself, I also have several times a chance to have meeting with him. So he understands very well the needs and the pain points of Taiwan industry. Yeah. So very interesting. If you look at the new appointment of the leadership of our new government, you will see a lot of department heads from ICT industry. Yeah. So I'm very confident that President Lai will urge the new government to develop those new policy helpful for the ICT industry to further drive forward the strengths of Taiwan tech industry.
Yeah, that was Steve there with Samson Hu, the co-CEO at Asus, in an exclusive conversation. Right, so just back to markets right now, and you know what, we're few bright spots, really, if I'm being completely honest right now. And this is really the story across the region. So Li Auto's a big story to watch. That's an earnings disappointment, down 18%. We're 1.3% to the downside here on the Hang Seng Index. That's really where most of the gains so far, the bulk of the gains have been so far in this China rally. And within that space, of course, it's really been in things like gold mining stocks and the tech aid in terms of points contribution. We're still watching other themes in this market right now. 2 days of dollar strength, the continued melt-up we're seeing in prices of things like copper and iron ore. More on that in a moment. Just ahead here on the China show, conversations coming up on where we go next with the Iran conversation, Atlantic Council on really where they see that story going after the death of its president. Plus, we'll look at where Goldman Sachs is seeing uncertainty in the Asia-Pacific region. We're talking all things economics with Goldman guys, of course, in about those times. This is Bloomberg. Welcome back. You're watching the China Show. We're entering the second hour of the program here, and just a brief look at where markets are. Just a run through very quickly of the key benchmarks in this greater China equity market. So bottom of your screen's MSCI China, CSI 300 volumes are light. Extremely tight range on the benchmark today. We were testing 3,700 yesterday. That seems to be a more a Monday story than it is currently right now. Really the lack of catalysts out there, but who knows what this market could give, and the sort of regulatory and policy pronouncements that have really managed to lift this market to current levels. Very quickly, Hang Seng Index, we are at session lows. We're now down 300 points. One big mover to track, or we have been tracking since the open, has been Li Auto, 17% on the back of that earnings disappointment. So that's a flavor of Chinese markets. For a flavor of broader markets, let me bring in my co-anchor this hour. Haslinda Amin joins us, of course, out of Singapore. Has, it's a fairly risk-off day going into important Fed speak, and of course there's the big Nvidia earnings report coming out too.
Well, that's right. It's not too bad, right, Dave? I mean, taking a breather after a run of 7 days. If you take a look at the S&P up, what a massive $12 trillion since October. So it is time for markets to take a breather, wait and see if Nvidia comes out with the numbers that they want. Remember, the bar is really, really high. Max 7 has had a fantastic gain so far, and it's going to take an outstanding number for that rally to continue, right?
Yep, absolutely. I think it's number 3 in terms of just market cap behind Microsoft and Apple. The bar is extremely high for a company of that size, growing almost like a startup still. To Haz's point, right, maybe just on the latest market moves that we've seen, and this actually came from one of our guests earlier on. So we've been talking about this copper rally that is continuing at this point in time. So you have these 3 contracts, LME, Chicago, and the one in Shanghai. And our previous guest in the last hour, Stephanie Leung, talked about how what's happening in the copper market to them is an indicator of a bottom and a recovery in the global manufacturing story, which might actually mean still tilts in terms of favoring risk in your portfolios. And we're also joined by iron ore, which is the dalian on your bottom of your screens, and also where you are with the copper, the iron ore contract in Singapore at about 120. I'm also joining the rally today on perhaps a different story is also crypto. So Ether did very well overnight. It's still doing well right now. We're back above 71,000, in fact, there on Bitcoin. And some of the crypto-related equity names in the region, like Wuri and Huobi Tech, are also feeling this jump. Right, the broader rally, well, that's so far where we are seeing the bright spots. Elsewhere, though, we're trading sideways to lower. Nothing much to tell you about as far as this is concerned. Second day of dollar strength. Hazel, I'll leave it there. Back to you.
Well, that's right. Let's get insights, perspective. Bloomberg MLive strategist Mark Cranfield joins us now here in the Lion City with me. You know what? It is about Nvidia. It is also about the Fed. And we had Masters saying, you know what? 3 no longer on the cuts. Well, surprise, surprise, it's now 1. But really, the question really is whether policy is restrictive enough. Master says restrictive, but is it restrictive enough given the current sticky inflation?
Yes, but they're probably going to try and thread the needle. They're going to have to change from 3 dot plots. Time has passed. and they've been keep on saying higher for longer. Inflation's not been doing what they want to. So obviously they need to acknowledge it. It's almost like a mark to market. You can't stick with 3 rate cuts when it's just not possible with the time of year left. But they might go for 2. They might try to find a way to keep the markets relatively happy, keep the door open in case inflation starts to come down a little bit quicker than they thought in the second half of the year, or the unemployment situation worsens. And there are some signs there's cracks starting to appear in there. So they would like to have as many options. A good central banker will always like to have as many options on the table as they possibly can. So, and the markets will probably take that pretty well. If they do just change to 2 potential cuts for this year, that will be something the markets can live with pretty well. If you get a combination of a decent Nvidia result this week and the Fed dot plot's only going to 2, we're probably going to be in for a pretty good period for markets to continue for the weeks ahead.
You know, not too long ago, we heard people say, don't fight the Fed. Markets fighting the Fed.
Yes, but it's done it before as well. I mean, the markets always tend to extrapolate. They get carried away on both the upside and the downside. So we saw right at the beginning of this year, the market got way carried away on having rate cuts all the way through to the middle of next year. And of course, that turned out to be way in advance because we had a couple of hot inflation prints in the meantime. We also saw it at the beginning of the Fed hiking cycle where the markets were expecting hikes forever. And they got way ahead again in that time. It's what markets do. I mean, it's not unusual. People have got trading positions. They want to do something with it. They want to show that they know how to put this money to work. So currently, we haven't got to extreme levels, but we're starting to go to the point where markets are getting very optimistic. You can see it in the equity market. Currencies are being helpful in the sense that the dollar is strong, but not too strong. So people are beginning again to look for the easing cycle to go on for longer, maybe than they should, really.
Yeah, Mark, and arguably that's what's carried the torch in the absence of any clues from the Fed on when they're going to cut or how many they will go for has been the Nvidia story. And I know you guys mentioned this as well, but just contextualize for us the question of the day for our viewers. I mean, it's rare we talk about a company whose earnings are in 2 days, this point, but I guess that underscores the point here, Mark. When will Nvidia become the largest U.S. company?
Well, if it continues at the pace that we've seen this year, it will just be a matter of a few months probably. It is unusual because it's rare when a single company can have a macro effect across risk assets, and that's what we're talking about here with Nvidia. It's something like in the heydays of Apple, they were able to do it as well. And the interesting thing is there that although the bar is very, very high for Nvidia, they've already had very good results in February. Since then, the stock is up about 40%, which is crazy for a $2 trillion company already. But what we saw many times with Apple was that even when people had very high expectations for several years, Apple kept on achieving them. So it may well be that Nvidia has something up their sleeve, the AI story has got legs, and they come in with something which satisfies the market. Either way, it's a huge event because they are quite capable of either bringing down the broad market by 5 to 10%, or extending the massive rally that we've seen already. You just can't avoid it, and everybody will have to be glued to the results when they come later this week.
And Mark, just back to macro here. Aussie-Kiwi cross, you've been writing about that on the blog today. So RBNZ rate decision, put that in the context of that, and also these RBA minutes, which just came through about 30 minutes back.
Well, the New Zealand Treasury put out another report today giving a pretty bleak assessment of the economic conditions in New Zealand, and surely the central bank will be taking note of that. So I think there's a pretty decent chance that what you'll see from the New Zealand is going to be a dovish outlook, possibly even hinting at their first rate cut to come maybe before the end of this year, which looks like it'll be quicker than the RBA because today they sounded slightly on the hawkish side and ready to keep rates higher for longer. So you've got a bit of a disconnect there, which probably favours the Australian dollar.
All right, Mark Cranfield, we thank you so much for your insights today. And of course, you can follow more on this story and all the day's trading on our Markets Live blog. That's on the Bloomberg and MLive Go. You can get a market rundown in just one click. There's commentary, there's analysis from Bloomberg's expert editors, so you can find out what's affecting your investments right now. And Dave, right now we're doing a check on the run-up in copper.
Yeah, which could include really what's affecting leading indicators of perhaps growth ahead. So copper is coming off highs today. We just checked this about 5 minutes back, and it was showing green. So I guess that goes to show really of maybe the market's gotten a little bit overextended here. We are at record highs effectively still for many of these contracts. Plus, of course, iron ore is back to what, the highs in about 2 or 3 months. Let's bring in Martin Ritchie, our Bloomberg Commodities reporter, for more color and context here. Martin, let's start with copper. I mean, have we set ourselves up for a drop after what has been, so far up to this point, quite a powerful move up?
Yeah, it was interesting listening to your previous guest there, Mark, talking about the sort of markets perhaps looking a bit frothy, because if you look at copper, hit $11,000 a ton yesterday, a record high. We've seen a flood of sort of speculative money, investment funds piling into copper over recent weeks and months, and that's really driven up the price. Why are they coming in? Well, there's couple of reasons specific to the copper market, and there's been a big short squeeze in the New York COMEX market. The signs of tight raw material supply, and those have kind of attracted people who are also looking at copper as a sort of long-term bet on energy transition. But the fact is that real physical demand around the world, it doesn't look particularly exciting, and there is, of course, the danger that prices do take a bit of a correction from here on.
Martin, iron ore not to be outdone, up for a third day, getting to 120. What's the story?
Yeah, a slight uptick in iron ore. What I would say is nothing too dramatic, though. It's not like anything that's happening in the copper market over the past few weeks. Iron ore went down below 100 back in April. It has kind of floated up, and obviously you've had sort of slightly more forceful measures on the property market from Beijing, and I think that's just helped pro-growth sentiment in China, and the idea that steel demand might not be quite as bad as feared, perhaps later in this year and into next year. But again, iron ore does look fairly fragile, even at these modest levels.
Martin Ritchie, Bloomberg's commodities reporter, thank you so much for that. Now, still to come, we'll look at what's next for Iran after the death of its president. Hear why the Atlantic Council sees no change in Tehran's strategic direction. This is Bloomberg. Welcome back. Power transitions in the Middle East are in focus as the death of Iran's president poses questions about who will succeed Supreme Leader Ayatollah Ali Khamenei, who's in his mid-80s. Meanwhile, in Saudi Arabia, King Salman's health is being closely watched as he receives treatment for a lung inflammation. Let's bring in Jonathan Panikoff, Director of the Scoutcraft Middle East Security Initiative at the Atlantic Council. Jonathan, good to have you with us. Let's start with Iran and the passing of Raisi there. I'm just wondering, how does it change the calculation of succession in Iran?
Yeah, great to be with you. Thanks for having me. Look, I think whether it changes succession long term is going to be a question of when the supreme leader actually passes on. Raisi was a leading contender to be the next supreme leader. Obviously, with his death, it opens up questions about who's going to fill that spot. The early prognostication has been that it helps Khamenei's son, Moshtaba, that he's close with the Revolutionary Guards, that without Raisi in the picture, he's the most likely. I'm a little skeptical of that analysis. I think the reality is the system is going to put other contenders in place, other ultra-conservatives, and others with better religious credentials, frankly, than Moshtaba. So if it's a short-term question that you see the supreme leader, for instance, pass on in the next few months, then yes, Moshtaba may be able to consolidate power. Over the long term, I think there's going to be a number of contenders, but who wins out, it's too early to say.
A smooth transition has been key for Iran for the past 10 years. Does it change that at all?
Well, the death of Raisi certainly doesn't really change much, simply because ultimately the power vested in Iran is held by the supreme leader. And so the president passing away is not going to have a big impact on Iranian domestic or foreign policy. For the supreme leader itself, no, it's probably not going to change much, as in you're going to have a variety of contenders who are possible to succeed Ayatollah Khamenei. But obviously, the big change becomes Raisi was supposed to be one of the top contenders. He's no longer available to be so. So the question is going to be, is there somebody who takes his place?
Right. Jonathan, David here. So when I think we're looking at two roads to your point now here in terms of succession. So if I'm not mistaken, the Constitution, if they do go that direction, means that we'll get elections, let's say within the next 2 months or so. Do any specific people come to mind that might actually be in the lead for elections? And then we'll talk about implications after that.
Yeah, so I think immediately the Constitution, Section 131, says, look, elections have to be held within 50 days. Right now, power is transferred to the first vice president, Mohammed Mokhber. He's not going to be the ultimate successor to Raisi. After 50 days happens and the election, there's a couple of people. The name that's been thrown around most is Mohammed Khalibaf, who is the Speaker of the Majlis, the former mayor of Tehran, and has been a long-time contender for the presidency. He's run for it a few different times. But there are going to be others who are going to come into the picture and take a shot. Who ultimately succeeds? It's unclear because it's unclear who's going to be allowed to run. In Iran, the Guardian Council ultimately is a collection of senior establishment clerical figures, and they literally say, no, person A is not allowed to run, person B is. And so it really narrows the pool to only contenders who fit the more ultra-conservative model that Raisi also represented.
Right, and Jonathan, just to take a half a step back, you also view this development as something that the regime did not want to get into. I mean, elections would be perhaps one of the last options they wanted to have. Just tell us why this exercise is challenging in your view.
Yeah, look, the regime is doing better in terms of its foreign policy and its regional policy. Connections with Russia, connections with China have really been extended over the last year. But domestically, in the wake of the Mahsa Amini protests, the regime is really struggling still. There were parliamentary elections in March, and in those elections, the official turnout was 41%. That almost was certainly way overestimated, or frankly just lied about. The more accurate numbers are probably around 15, 16, 17% turnout. That kind of turnout gives rise to questions about legitimacy of the president, of the leading politicians. And there's also a concern, unlikely I think, but a concern that you could see protests again, that this could be an aperture for people to say, look, we're going to have another new president. He's not respected. He's not supported by the broader population. And that creates incentive to go back out onto the streets.
Jonathan, meantime, in Riyadh, we have the health of King Salman in question. How concerning is that, especially against the context of his son, MBS, as is known, already running the day-to-day business?
Yeah, look, I don't think you'd see a huge shift, at least immediately, in terms of what would change in Saudi Arabia. As you said, MBS has been running the day-to-day business of the kingdom for quite a while now. We've seen him grow into that position quite a bit from when he came in and held, frankly, hundreds in the Ritz to protest corruption issues. And we saw the killing of Jamal Khashoggi. But the reality is it's a fragile time in the kingdom. We saw them pull back on some of the Vision 2030 projects like NEOM. We're seeing questions about how far Vision 2030 is going to be able to extend in terms of success as the kingdom desperately tries to diversify away from hydrocarbons. So I don't think there's going to be a big shakeup in terms of policy, but it is at a bit of an inflection point as it seeks to move forward.
Jonathan, final question. We didn't get to it, but I guess the undertone across all these conversations is really what's happening in the region, Israel and Hamas. I think the latest development here was the ICC, International Court of Justice, seeking arrest warrants for both the Israeli Prime Minister and the Hamas leader. Do you think that changes anything? And do you think they will actually get arrested, is the other question I have.
I don't think it changes anything immediately, other than it actually may make it easier unintentionally for Netanyahu to continue military operations. In other words, there's a bit of a rally around the flag issue in Israel at a time when he was under significant pressure, including from his own cabinet. And you saw Gantz come out and Gallant come out and vehemently object to having the ICC arrest warrants. Whether they'll be arrested, look, I think it becomes a real challenge. It means that they may not be able to step foot in many European countries and many Latin American countries. 124 countries have accepted the jurisdiction of the ICC. Theoretically, they'd be obligated to arrest Netanyahu and Gallant. On the other hand, let's see if the arrest warrants are actually issued. What the prosecutor did was refer the warrants to the pretrial chamber to be issued. I expect that they probably will be, but they haven't yet. So there's still quite a few steps to go here.
Jonathan, a pleasure to have you on the show. Thank you for taking the time, and of course, thank you for staying up as well live out of Washington to Jonathan Panikoff, director of the Scowcroft Middle East Security Initiative at the Atlantic Council. We'll leave you with a light look at just moving into 10:30 in the morning, which looks like 10:30 in the evening, if you ask me, here in Hong Kong. It's really coming down, both in terms of condensation and these equity markets, as you can see both on your screens. Amber rainstorm warning is now up across the city. This is Bloomberg.
I have the energy that I've always had. That's important. I think when I can't put the jersey on and give it full thing, I should leave, basically. The board probably, it's up to them at the time. Will I stay as chairman for a while? We'll see. But I think and we're on the way. I mean, we're moving people around.
Jamie Dimon there, the CEO of JPMorgan, speaking about, surprisingly so, has succession plans at the bank. Well underway is, I think, how it was described. And, we have a full story on this, but effectively, right, he's always bantered when he was asked about who was going to succeed him or how long he would stay, that it was always 5 years away. But in this case, of course, the answer to that question wasn't 5 years away.
So maybe it is closer than 5. And of course, this is a man who's been in that position since 2006. So he's had quite a run. And to be fair, under his leadership, JPMorgan has done really well. And he's also said it's really up to the board to decide when or how this happens. But, to qualify, he has made changes. In fact, early this year, he did move some of his top lieutenants to, more senior positions to, I guess, test them out to see who is best to lead JPMorgan when he leaves. So it is closer than you think, perhaps, Dave.
Yeah, and I guess the point we'd also want to make here too is, to your point, it's perhaps not 5 years, but it doesn't seem imminent as well. I guess it's the markets tend to overcorrect on the narrative here as well. There we go. At least we're talking about it at this point in time. Right. We're looking at shares of Tencent right now. We're down about 2.7%. It looks like we are giving up some of the gains in recent weeks. Although that said, this has really been one of the best performing, if not the best performer. Biggest points contributor, to be more specific, on this Hong Kong and Greater China rally. Other things happening as well, just to pivot away. This dollar strength story is really coming through. And just have a look at where you are, dollar peso, for example, trading now above that key 58 level. A couple of other currencies coming online, like the baht, of course, seeing some weakness there, the Korean won, and also the Chinese currency. The opposite, though, is true when you look at where you are in cable. And at 127, takes you back all the way a couple of weeks here as far as cable is concerned. The broader story, though, amidst all the Fed conversations, has been a stronger dollar story.
All right, up next, we'll be talking APAC economies with Goldman Sachs and the uncertainty they're seeing amid tensions between the U.S. and China. Welcome back. It's 11:29 a.m. in Tokyo. Japanese markets going on a break in just a moment, managing to eke out some gains on a day when Asia is in negative territory. Japanese insurers in particular are trading higher after announcing stock buybacks. Here we're talking about the likes of Tokyo Marine, as well as plans to sell their holdings in client companies. Nikkei 225 up 0.2%. Topics in the positive as well. We're taking a look at where the yen is trading. 98.2 is the number we're looking at, pretty flat versus the USD. We're also tracking the earnings season in Japan with just 4 more companies reported earnings yesterday. 224 out of 225 companies have now reported in the Nikkei 225. The last one is happening on Thursday. So far, during this earnings season, that's been pretty positive, with most companies posting an upside earnings surprise. Financials, in particular, the highest laggard, posting 35% revenue growth and a minus 45% decline in net profit. There you have it, the earnings season in Japan. Dave.
Yeah, which takes us now into, I guess, in some ways, the back into the macro as well, right? So I think yesterday, when you look at these markets, and we're pivoting a little bit away from that because, well, away from risk today, just about every single sector is down, as you can see on your screens. The strong dollar is back for a second straight day. It's mostly a story against EMFX than it is against major currencies at this point in time. And case in point is sterling and where you are as far as that's concerned. But yeah, it's a risk-off day. Certainly the lead coming out of Wall Street wasn't as strong and clear-cut as usual. But who's to blame? Of course, Nvidia is coming out with earnings in about a day and a half. Well, almost 2 days, in fact. It's coming out, I think, 5 a.m.-ish Thursday morning. So we're still a good 2 days away, but it's perhaps the biggest event in markets this week. 0.6% to the downside. Asia Pacific benchmark, S&P futures are effectively doing absolutely, like most of you guys sitting at home, absolutely nothing. Okay, a brief recap of data which had come through recently. So late yesterday, Taiwan export orders up the most in 2 years, arguably, of course, backward-looking data. On the way up, dollar Taiwan, bottom of your screen, 32.30. Of course, this is taking place against the backdrop of a new president taking and being inaugurated yesterday. Pivoting to Korea right now, and the data came out about 2.5 hours back. So prelim numbers, first 20 days this time around, 1.5%. Has the range shifted higher compared to what we saw in early 2023? Maybe you could argue so. Is the data turning is a bigger question. Is this more than a chip? Is this more than a chip story broadening out as far as exports go? Let's put that question really to our next guest in a couple of moments here. But before that, too, there's a rate decision in Korea this week, apart from others, of course.
That's right. It's always about waiting on the Fed, though. It's set to be a busy week for central banks in the Asia-Pacific. On Wednesday, both the RBNZ and Bank Indonesia are set to release their latest monetary decisions. Bloomberg Economics thinks both will keep their policies tight. While on Thursday, the Bank of Korea delivers its latest decision. Bloomberg Economics sees the BOK playing a game of patience as it waits for the Fed to pivot. And earlier we got minutes from the RBA's latest policy meeting showing officials discuss rate hikes before deciding that the case to stand pat was stronger. Let's put it all in perspective, Dave.
Yeah, why not? Joining us here in set is Goohoon Kwon, Senior Asia Economist at Goldman Sachs. It's nice to see you. Good morning. So perfect timing to have you on to talk about all these developments. The Bank of Korea is this week. How do you think they're going to, what's their assessment, do you think, of this economy, particularly when it comes to exports?
Yeah, export doing well, but then consumption is weak, although Q1 number was a surprise. But we think that going forward, we continue to see downside risk to consumption because of elevated interest rate and also the property, the market downturn. At the same time, inflation is falling when you look at core inflation, which in the case of Korea and many other Asian countries, core is lower than headline. Right. Opposite to the U.S., right? So we continue to see the trending down core inflation, which will allow Bank of Korea to cut sometime later this year. But this time in May meeting, I think they will on hold again with a cautious outlook, given what's happening with the U.S. monetary policy stance, risk, their uncertainties, data dependency, oil price, etc. So, but we think that if our forecast is broadly right, then core inflation will continue to fall, and the headline inflation will also begin to fall along when we approach the summer, because in our view, in our estimation, about a 60 basis point of increase in headline inflation come from fruit price.
Okay.
Which should be, the shortage should be easing, over the summer because of new supplies coming.
Okay.
Yeah.
Now, I guess the question now for markets is, so fine, unlikely they will move on Thursday. The next meeting, to your point, is tricky because it's in July.
Yeah.
It's a few months from now. It's in the second half of the year where they said they could maybe entertain a rate cut. Do you think the data will cooperate by July?
Data and also the major central bank decisions.
Right.
Last time they added the qualifier about one of the considerations for their monetary policy decision, which is the diversification in major central bank monetary policy, which is for the first time. So that our interpretation is that even if Fed does not cut by the end of July, by the end of, let's say, September, then if ECB and Bank of England go ahead with the cut, BOK could consider if inflation, core inflation, continue to go down. Yeah.
Goohoon, it's also about the USD exceptionalism that's weighing on Asian central banks in particular. We saw how it forced Bank Indonesia to hike rates. I mean, really, how might this play out in terms of the respective economies? Because, as much as they're exporters, they're also importing materials.
Yes, you're absolutely right. I mean, that's why I think back in 2022, August, Jackson Hole meeting, Bank of Korea governor said that BOK is not independent from Fed. So that still resonates. Having said that, export is doing well in a way to constrain less on monetary policy of Korea, because at the end of the day, people, central bank care about, including Bank of Indonesia, care about the rate differential because of its impact on exchange rate. But if your export doing well and also capital inflow, the increase because of better earnings prospects, etc. in the case of Korean tech companies, then Bank of Korea will be less worried about the incremental increase or just elevate the rate differential than otherwise could have been.
How much capacity do central banks in Asia have to keep supporting their own currencies, including China?
It depends on countries. That's a good question. But like, for example, North Asia economies like Taiwan, Korea, they have sufficiently large reserves. And also, on top of that, they have a huge net foreign asset. I think Taiwan is totally off the chart, more than 100% of GDP. Korea, I think, is about a third, about 50% of GDP. So I think in the case of Korea, they can also rely not only on capital inflow and current account surplus, but also rely on some of the money coming back from outside of Korea, given that they have a huge the foreign assets, including U.S. securities.
You bring up now the topic that's come up, the broad topic that's come up is, competitive devaluation of currencies, given, exports in the case of China, for example, is really where they're getting the growth.
Yes.
And I'm wondering, broadly, are you seeing a turnaround in the export cycle when you look at Taiwan and Korea? Are you seeing any crowding out effects of Chinese shipments? Are those two, do they export two different, broadly speaking, types of goods, for example? Like, where are you on that story?
I think at least for Northeast Asia economies like Japan, Korea, Taiwan, China, they are less, when you look at the numbers, the export or on that export, less dependent on the labor competitiveness.
Okay.
Is more driven by capital flows, especially in the case of Japan, and similar to Korea, Taiwan definitely. And also, when you see the industry by industry or company by company, you see the way companies are adjusting is not really the volume or price, but actually margins. That's because they moved into high value added.
That's right.
High value added cars and high value added semiconductor and the electronic goods. Therefore, currency weakness does not necessarily mean they have to. Currency weakness, for example, from Japan, does not mean that Korean won should weaken or Taiwan dollar should weaken. Because now what is driving is actually the earnings earnings prospect and the capital flow rather than trade competitiveness, which is still the case in the case of Southeast Asian economies because they are still producing labor-intensive goods, etc.
Goohoon, just briefly, final question. We have the U.S. imposing new tariffs on China. How might this play out on China as well as Asian economies?
Yes, I mean, still it is hypothetical. You are talking about the next year's U.S. tariff policy. But so far, what has been done is very minimum because, whatever that, put on China EV is very small part of China's export to United States. Although EV export is allowed for European-bound, China export. But if our China team come with the numbers on the hypothetical case of 60% tariff on all cross-border U.S. import from China, then it will be quite damaging. If that happens, based on experience, 4 or 5 years ago under the Trump administration, our China team estimate that impact on GDP almost as much as 2% of GDP.
Goohoon Kwon, fantastic to have you. Let's run this back again. We didn't get to talk about the inclusion of Korea and also the Bank of Thailand, which is getting interesting. Maybe you can do that next time. Goohoon Kwon, senior Asia economist, there at Goldman Sachs. Just ahead here and shows the growing chatter on Weibo over whether housing prices might actually see a rebound. Your China brief is just ahead. This is Bloomberg. Okay, welcome back to shows. You're watching the China Show. Just an alert to tell you about here. Ali Cloud has announced that it will be cutting its prices on services, Tongyi Qianwen, effective May 21st. All that being said, is there a reaction in the stock price? Not so much. I mean, markets have been on offer really for the most part of this morning. The other thing I'd mention as well is when you talk about the cloud sector, generally speaking, of course, you have the sort of private sector companies, Tencent and Alibaba, increasingly, of course, competing with some of the state-owned names there as well in that specific space. Anyway, Ali Cloud coming out with a strategic decision to cut prices on their services effective. I just didn't realize May 21 is today.
Well, now let's get you your China brief, a look at what's making headlines in national newspapers and trending online. The Communist Party's official mouthpiece, the People's Daily, has a front-page piece slamming U.S. accusations of industrial overcapacity. This has been a recurring theme in Chinese state media for several weeks now. The article quotes experts who say the claim is meant to contain China's new energy industry and is an excuse for trade protectionism. Meanwhile, Shanghai Securities News reports that foreign investors' enthusiasm for yuan bonds is growing. Citing data from the AFEX regulator, it says foreign institutions increased their Chinese bond holdings for an 8th consecutive month. And the PBOC-backed Financial News is flagging calls for the government to shift policy from increasing credit supply to boosting consumer demand. It quotes analysts who see plenty of room to boost lending to consumers whose borrowings, excluding mortgages, account for less than 10% of total loans. Dave.
Yeah, in fact, when you look at other platforms in social media, Weibo, for example, and really on the conversation around consumption and property, debate is heating up whether housing prices will actually see a rebound. And that's after authorities, of course, relaxed fairly big rules, mortgage rules. They urged local governments to step in and buy unused inventory. The strongest moves yet to ease this ongoing property problem. Let's bring in Min Lo, our China correspondent. More context here in these discussions taking place. So how is this rescue package being received?
Yeah, it's interesting. Since the government rolled out this broad rescue package, we see state-linked media like Global Times saying that there's been this huge surge in property trade over the weekend. And on social media, there's this debate about whether we'll see this retaliatory rise in home prices. Now, that's a term that we've heard last time when the government lifted pandemic restriction measures, whether we would see this retaliatory rise in spending. Right. Now, most people on social media are saying no, but there have been some interesting and rather sarcastic comments. Take a look at this one. They think once family planning is abolished, the population will grow with a vengeance. Once pandemic measures were lifted, people will consume with a vengeance. Once housing restrictions are lifted, people will buy house with a vengeance. They thought we'd retaliate, but we chose to be good people and let go of our hatred. This comment just cracks me up. And take a look at this other one. We're anticipating a rise in house prices because some officials are lazy and not handling the economy well. Ouch, that hurts. Yeah, and look, I feel that there's almost like a direct correlation with how rich people feel and the direction of housing prices, because 2/3 of people's wealth are locked up in housing, and those prices have gone down for 11 straight months now. So there's this very sticky sense of pessimism right there.
Min Min, another interesting story trending on social media. Utility price rises hitting consumers really hard, and a restaurant even being cancelled for it.
Yeah, this is an interesting one. So according to one study, in about 125 cities and counties, we're seeing gas prices rise by about 10%. And it's not just gas, utilities as well, your power and water. So, and the timing is rather unfortunate. It comes at a time when China Railway has also just announced that it would increase prices on a couple of its more popular high-speed rail routes by 20%. And so even though inflation is just hovering just above zero, but your utilities, transport, these are things that you use every day. So people are concerned it's going to have an outsized impact on consumer confidence. And this restaurant owner had supported this price hike for consumers, and he's being cancelled on social media. People leaving negative reviews on on an app that review restaurants. So it's on its way out now.
Okay, Min Min Lo there taking us through the nuance there. Our China correspondent. Now back to the property story, and certainly the very good point that Min Min just brought up there, right? The debate whether or not the excess supply issue is going to go away, debate whether or not prices have bottomed. Let's bring in our Bloomberg Opinion columnist, Shu Li-ren. Her latest column, a tale of China's two housing markets. You mentioned one of the arguments you're putting out here is investors need to be cautious.
Yes.
At that point in time. Well, tell us why, and then maybe let's look at the different parts of this housing market.
Let's take a look at the last 3 years. After such harsh property crackdowns on the developers, on their financing, everything, right? Has President Xi Jinping really changed his mind? That's the real question on investors' mind. And from his viewpoint, China's housing market can be very complex, just like the U.S., with huge variations from city to city. For instance, if Shanghai or Hangzhou, they have bottomed out, does that mean that the worst days are over and the Chinese government's housing rescue is done? That really is a very important question. And I think going forward, what we are going to see is that a few cities will actually bottom out this year. Like as Min just mentioned on social media, right? Like Hangzhou is doing fairly well. Shanghai last week, the luxury, there was a new luxury project pushed out by Singapore's CapitaLand. It was sold out within 45 minutes. On the other end of the scale, there will be like northeast cities in Harbin or Jilin. They will take decades to clear out their inventory.
Speaking of decades, Shuli, what's the lasting impact of this property downturn?
I think the Chinese mayors, or in China's case, the party secretaries, they will have to be a lot smarter in managing their cities. Going forward, all the big cities, they're going to fight for young talents and population inflow, because that's the key factor to prop up a city's property prices, fiscal income, etc. And you are seeing it already in some cities such as Shanghai and Hangzhou. The city governments, they are quite efficient. If you raise a complaint about the sewage problems, water shortage problems, the fixers will come within like the day. So I think what's going to happen is that there will be huge variations across different cities in China, just like what you are seeing in Japan, where Tokyo new condo prices are hitting record heights, and then in the countryside, the vacancy rate is like 13 to 14%.
Shu Li-ren, thank you so much. Our Bloomberg Opinion columnist. Her latest column is on your Bloomberg terminals. Right, just looking at markets right now, and we're just, an hour, 20 minutes into the session here, and yeah, we are on offer here 2.2% now, 450 points, give or take, 19.2 on the Hang Seng Index. A big drag, of course, are big tech plays. Tencent, of course, very much in focus as well. Right, plenty more ahead. This is Bloomberg.
Welcome back. A look at some stories we're following today. China has criticized the inaugural address of new Taiwanese President Lai Ching-te. A spokesman says Lai sends a signal of seeking independence and that the motherland must be reunited. Lai was sworn in on Monday and used his first speech as president to call on China to end its campaign of pressure on Taiwan. South Africa's top court has barred former leader Jacob Zuma from running for parliament. That's due to his 2021 conviction related to the plunder of over $27 billion of state funds during his presidency. Zuma's upstart political party is seen as a wild card as South Africa gears up for elections next week.
Just looking at markets right now, so it's a day finally where we are seeing most weakness across these markets. So, case in point here, EVs very much in focus. You have you have Li Auto coming out with earnings yesterday. Big drop overnight in the U.S. Unsurprisingly so, a very big drop today, 20% on Li Auto here. This should be the biggest drop in about 2 years since 2022, and I guess this is really dragging down the sector. And of course, just keep in mind, many of these names have performed very, very well of late. Next in line is XPeng, is coming out with earnings later today. And, of course, there's an earnings call as well around 8 p.m. Local time. That is, of course, in Hong Kong, 7.9% to the downside. Right. Let's pivot, have a look at other stocks that we're tracking. So Tektronic, the company announcing the resignation of the CEO. Stock is down 7.5%. Trip.com, it came out with earnings about a few hours back, was higher, has now reversed course and is trading lower right now, down about 1% in the Hong Kong session. Very, very quickly, have a look at where we are as far as crypto goes. So crypto-related equity names, crypto assets have been bid substantially. 5% up today in Ether. I think we were up 14% yesterday. Bitcoin is now above 71,000, and some of the related names are also trading against the grain here in the Asia Pacific. 11% on this Korean-listed one, and of course Huobi is listed here in Hong Kong. Global macro movers, the story is equity markets are trading sideways to slightly lower. Most sectors are down. Volumes are on the lighter side of things. We're just about wrapping up earnings season in Japan, and we are almost at the thick of things, well, towards the tail end of things here in Hong Kong. And I think this graphic tells you everything you need to know about the story across these markets right now. Dollar strength, equity market weakness, yields are pushing higher. VIX futures, bottom of your screens, are seeing some upside after we closed below the 12 handle on Monday. S&P futures are flat. The big one coming up in a few days, 2 days or so, Nvidia. That's it from us here on the China Show. Bloomberg Markets is next. This is Bloomberg.